And I guess another thing to that point would be when you see that volcano bond, which I don't know if it's going to be issued or not, but from El Salvador, this is another thing that's testing Bitcoin, perhaps. Can a country maybe get out of the thumb of the IMF and issue their own kind of bonds instead of borrowing constantly from the IMF, and through that create another financial asset where Bitcoin's kind of proven itself again? Is that
I think that's a big test. I mean, one thing that blockchains do is they kind of decentralize uh, finance, right? So, for example, stable coins make it so that people can send international payments peer to peer without going through central bank, them sending money to each other, right? Just peer to peer over the internet. And the same thing's true for Bitcoin. And then the same thing's true for countries that want to raise finance. They can raise finance from hedge funds and individuals over the Liquid network, for example. And I do think that's a test to see how it turns out, because right now one of El Salvador's biggest risks is that their sovereign bond yields are blowing out. They've been down, their bond market's been downgraded by rating agencies. There's not a lot of appetite from foreign official channels to buy their bonds at the moment, and so they have somewhat of a long-term refinancing risk here. And so we'll see how they're able to shift the type of market that's interested in them.
Okay, so what about this thought? What about asset confiscation by governments by the end of this decade? Do we get to a point where governments get broke? Country like Canada is saying, hey, listen, we're broke. And we're going to confiscate some assets. And the reason I bring that up is someone who I think is really level-headed with this type of thinking is Jeff Booth. And in talking to him a few times, at the end, he'll sometimes allude to, and I want to talk to him about this further, about asset confiscation, that we're kind of on that path, that perhaps this is a real thing. And in Canada this year, which I'm sure you've heard, some citizens had bank accounts frozen for over, a $50 donation to a protest, and they had their bank accounts frozen over that. And that really kind of propelled my thinking forward, thinking, holy smokes, if governments get desperate enough, now we see what's happening with Russia's reserves, but we're seeing some citizens get bank accounts frozen over $50. Maybe this idea of asset confiscation by governments 10 years from now isn't as, out there as I once thought. What comes to mind when I say that to you?
So that was a risk throughout the 30s and 40s. And it's a risk again. When you have major transitions, there are risks like that. And, generally they will try to disguise it, right? So, for example, to add to your list of examples, we're seeing now, so energy companies had a terrible 12 years, 10 to 15 years of returns. There are energy stocks that are cheaper than they were in like 2007, 15 years later. They went through periods where they had negative earnings, they had to write down losses. Now they're in a period where they're actually earning quite a bit of money. And some countries are coming in to say they're gouging prices. We have to do windfall taxes. We have to, now that they're actually having a good couple years, we have to do windfall taxes. So that's another example where you can have kind of changing the rules or narratives shifting around how to provision the government more, right? And it could be, let's say Bitcoin goes up 5x. It's like, well, all these rich Bitcoiners, let's do a windfall tax on the Bitcoiners. Or gold went up so dramatically, let's do an extra windfall tax on gold. Or
real estate in Canada. Real estate in Canada is one of those things. Yeah,
exactly. Real estate in Canada, or just, hey, like, look, wealth concentration's never been wider. We're going to do a windfall tax. So there's all sorts of things that can happen in these environments, right? And there are ones that could make sense, right? I mean, they got through the 30s and 40s in the Western world pretty well, all things considered. There are things that can make sense, and there are other things that are just out there that just they risk kind of the rule of law, or they risk kind of perception of the what is investable, right? So for part of the reason that nobody wants to own Chinese stocks right now is they spent a whole year just constantly changing the rules around how they're going to treat their big companies. And now they're saying, hey, we want to wrap up regulations, we want to respect property rights, we want to encourage international investment. And they might come back, but it's like it takes time to then build that trust again, right? To say, okay, what do I own if I own Chinese companies, right? And so generally one of the strengths of the West has been that you have pretty strong rights when you own property throughout Europe, Canada, United States, countries like this. And if you do threaten that, that can have implications for the ability to raise capital in the future and to get things done. So I think when you have decades of stress, like I think we're probably going through with commodity shortages and inflation and kind of the breakdown and some fiat currency, starting with the weaker ones and then kind of moving towards the main ones, um, you can get pretty extreme actions and you can get kind of rising populism on the right or the left. And that can encourage kind of extreme behavior if you start to get kind of a very strong political consensus.
I love how factually you talk about this stuff because I sometimes freak out about it. Sometimes I'll run around thinking, what the heck is going on in the world? And you just kind of break it down very, very factually, which I appreciate. So in one of your latest articles, I think you mentioned that China is now the biggest buyer of Saudi oil.
Yes.
What do you think China wants? If they're now the biggest buyer of Saudi oil, they must have some ability to influence what the Saudis do with their oil and how they price their oil. I mean, you have great articles on the petrodollar and what the petrodollar system. Do you think they want anything? Because they would obviously be able to make some demands.
I think they want to be able to buy oil in yuan. I mean, that's one. And so going back to what we said before, for most of this multi-decade period of, post World War II and then, including post 1970s, the United States was by far the biggest share of global GDP and the biggest commodity importer. And then over time, as we've seen the rise of China, which has 4 times the population, so even if they have less per capita, they're still bigger. They have more skyscrapers, they consume more electricity. In many ways, they're already bigger in terms of, say, purchasing power parity GDP. By kind of raw consumption, they're already bigger. They're the biggest commodity importer now. And the United States also, because we've developed shale, we've also kind of limited our imports to some extent. And so China has surpassed the United States as the biggest customer of a lot of oil exporting nations, including Saudi Arabia. And so one of the things that they can argue for over time is that we want to be able to buy oil in yuan. And so we see headlines where Saudi Arabia is considering it, right? When it's kind of the customer's always right. If your biggest customer asks something, you at least consider it. And now that you have Russia cut off from the West, they can gravitate east, and that gives China some influence to say, hey, Russia, I see you have some oil over there. We have yuan, and you can use it to buy electronics and manufacturing components, and so let's make a deal, right? So I do think that's part of the long-term trend towards a currency world. Now, the biggest shortcoming of the yuan is that because you have restrictive capital controls and just less property rights, rule of law, there's less things you can do with your yuan. So with the dollar, all these countries get dollars, and then they used to plow it into treasuries. And when that kind of got like a bad trade because of the low yields and compared to inflation, they started plowing it increasingly into equities. And they also, they go to Canada and Australia and they pile it into real estate, right? So there's some markets where, in the US it's stocks, in certain other countries it's the real estate. And in China, foreigners have not wanted a ton of their assets, right? So that's been the challenge. But I think over time, if they can get a handful of key partners, it doesn't take everyone, it just takes key partners. They're already the world's biggest trade partner with the majority of countries. If they can convince them to say, okay, hey, hold a percentage of your assets in yuan-based assets, then they start.
Makes sense.
Yeah.
Yeah, I like the way you broke that down. So basically, the last 100 years or so has been an anomaly with the US dollar acting as a reserve. We're kind of going back to a world where there's lots of different currencies representing different things to different people and creating a basket as you wish. If you want your base to be Bitcoin, if you consider that something important to you, it can be, add on some other things, and everyone will have a different mix. That seems like the world we're headed to. Yeah,
I think so.
Yeah. Okay. What about Canada's future in their oil and gas? Do you think Canada's oil and gas industry looks a little more appealing in the next 10 to 20 years just because of geopolitics?
I think so, because the oil sands have long reserve life. And so in a world of higher energy prices, the economics are pretty favorable there. Partially comes down to whether you can snatch defeat from the jaws of victory, right? So, for a while I've been fairly bullish on Russia, where I was like, okay, so I think we're entering a commodity bull market. They have low debt. They have, positive real interest rates. They have, they're a major diversified commodity exporter. And so, but now that's all in question because they got very aggressive. And so, Canada could do certain things that disrupts its future here, but I do think that among countries going forward in a market that I think is, I don't think commodities are going to go straight up for a decade, but I think that when we look back at the end of this decade, it would have been a very bullish decade for commodities. I do think that Canada is well positioned for that. And so I am pretty favorable on a number of Canadian assets, but I diversify it as part of a portfolio because I have to worry about jurisdictional risk.
Sure.